SVB execs sold 84 million in stock over the past 2 years, stoking outrage over insider trading plans. So if we start to look at a larger time frame, you're going to realize from 2019 and the next 3 years, especially because of the quantitative easing from the federal government, there was a lot of money in the world of VC. This bank, SVB, particularly catered to people who got VC money. So their deposits went from 50 billion to 200 billion very, very rapidly. They also decided, like a bank typically does when you have that much money, you do some loans, and their loans were a little bit higher risk, but I don't think that had too much to play here. That was just their business model for the people that they did business with. And like a normal bank, you put a bunch of money in bonds. Probably the worst time to put money in bonds is in a rising interest rate environment, and they put a lot of money in bonds right before interest rates took off. Now, typically, a lot of big banks will end up hedging this. You can easily hedge a rising interest rate environment. This bank, for whatever reason, didn't decide to do so. So either the execs and decision makers at SVB, they don't know what they're doing, or I don't know. It's very, very weird that they did not hedge it properly. Is that breaking their fiduciary responsibility? Maybe. Or are they just dumb? Also maybe. But where it gets crazy here is even though they didn't hedge it, that is fine. Even though they're taking a loss on paper of their bonds, it doesn't really matter if you're getting a bunch of deposits. But then all of a sudden, at the start of 2022, that's when the market started to fall off. That's when we went from quantitative easing to quantitative tightening. And also, if you look at the charts, that's exactly when their deposits weren't ripping anymore. The new deposits over and over and over again, that kind of helped fill the hole. It filled their issue. It made it so their issue wasn't known. But all of a sudden, when you're taking a bigger loss on your bond position, your deposits are dropping, and then someone comes knocking and says, hey, I need some of my money, that's when you might have to sell some bonds. And that's exactly what happened with SVB. Their initial loss was only 1.9 billion, but then when that got out there, it was more of a psychological implication that prompted a whole bank run, and then eventually led to the position we're in now. And the reason I'm bringing this all up is we know the CEO and other executives were selling recently in February, but I'm almost wondering is as soon as they saw their deposits dropping, I'm now wondering, did they know what they had on their hands was a ticking time bomb? And they're like, hey, let's get out our money while we still can, to the tune of $84 million. SVB CEO Greg Becker sold nearly 30 million of stock over the past 2 years. Kind of sus timing when obviously he has access to his own deposits within the bank. So he can see, deposits are coming off. We have an on-paper loss on our bonds. Maybe I need to cash out now. His sales, as well as those of other executives, are raising new questions over insider trading of his stock. Altogether, SVB execs and directors cashed out 84 million worth of stock over the past 2 years, according to Smart Insider. Blows my mind. Without a question, this guy should be investigated. Now, I very much believe that you are innocent until proven guilty, but I don't know if he's guilty or not. I'm not a lawyer, but I can say just from basic data that someone knew something was up, and it looks like some people profited off of it. I haven't really spoken about this before, but leading up to SVB's demise, like I'm talking late February, early March, someone knew something was up, because regional banks, which SVB falls under, not the most popular asset to trade, but out of nowhere, you see an explosion in dark pool trading of some of these random ETFs that included SVB. And then also for some of these regional banks, you saw massive spikes, some of them record-breaking in the world of options, all before the news broke. I don't know if it's related to Mr. Greg Becker here. I don't know if it was related to some other hedge funds. I don't know who it was, but someone needs to ask these questions. And in reality, regulators need to give us some answers, because something sus is clearly going on rather than just like a bad bet from a bank. Obviously, these are my own thoughts. I would love to get your thoughts. Let me know. I think it's very fair for the average person like you or me to be asking questions here.